I'm Adrian Cooper. I'm the Senior Advisor to the Ernst Young ITEM Club, and we use the Treasury's economic models to do forecasts for the UK economy, and we're publishing our spring report on prospects for the UK early next week.
And how do you see the economy in general?
Well, I think that looking through the rest of 2010, it's still going to be a pretty tough time. We are starting to come out of recession, but consumers are struggling with squeeze on their purchasing power because of the rise in fuel costs, energy prices. They're struggling with the fact that employment remains very weak, a lot of people still out of work, and on top of that, looking to pay down the debts that they took on during the boom. Alongside those problems with the consumer, we're now in a situation where the government's having to cut back as well. So we've already had the rise in VAT, we've got a squeeze on public spending coming through. That's going to hold down economic growth as well. And finally, companies are still a little bit cautious about investing this year because they're uncertain about prospects for the economy, and they have spare capacity as a result of the recession. But I think there is reason to be optimistic looking through into next year and beyond, and that's in particular associated with the fall in the exchange rate. And that means that UK PLC is now more competitive than it's been for over a decade. That creates a background from which UK companies can look to export their way out of trouble. Domestic markets might be weak, but there's strong export markets, particularly in Asia, especially for UK companies to go after, and with a strong exchange rate they're well placed to be able to compete now in those markets. And hopefully as trade improves, that will create the conditions in which, looking into the medium term, companies will want to invest more in the UK too.
Yes, I get the impression that you're saying that the worst is over and that we're now looking to the road ahead for recovery.
I think the very worst is over. I think it still can be a bit of a bumpy road over the rest of this year, and I don't think we should underestimate the challenges that we face as we in particular tackle the high level of debt that we've taken on during the recession. But yeah, I think that we're now in a situation where given the improved competitiveness of the UK, given the fact that interest rates remain very low, and also actually we're seeing companies outside the banking sector with pretty strong cash flow, pretty strong liquidity. They're getting the cash together. They may not want to invest it this year, but looking into next year and beyond, yeah, hopefully they'll start to invest it, and hopefully they'll invest a significant amount of that here in Britain.
I think that there have been some harsh lessons to learn along the way as far as consumer spending is concerned, but even that would perhaps look to be a little bit more optimistic than it was.
Well, I think for consumers, there's still some way to go to pay down debt that got to unsustainable levels. But I think one of the things that's been very encouraging through this recession is that whilst unemployment has risen a lot, it's not risen as much as most commentators feared that it would, and I think that's a signal of an improvement in the flexibility of the labour market. So I think we may well see employment improving earlier in the recovery than might normally be the case, which would start to create a sort of stronger income position for consumers and allow them A, to pay down debt, and B, to start to spend a little bit more.
Do you see any extraneous factors playing a part on that, perhaps rising energy or fuel bills?
Yeah, I think one of the big dangers to recovery would be the rise in oil prices. They've already moved up significantly and are now around $85 a barrel. Given the strength that we're seeing in emerging markets in particular, and that they're quite oil-hungry economies, I think there's going to be more upward pressure on oil prices, and a danger that we could see a significant spike higher, which would push up, obviously, our petrol and energy costs and intensify a squeeze on household spending power. And I think that's one of the factors that we would see as an important downside risk to be watching as far as the UK is concerned.
But overall, you're confident in your predictions for growth for next year and the year after?
Well, I think the UK is now in a situation with regard to trade and investment that is as favourable as it's been for many years. UK companies need to take advantage of that. They need to remain very cautious and cost conscious, and not allow the fall in the exchange rate to allow costs to get out of hand, and they need to be investing into the opportunities that creates. But if they can grasp those opportunities, I think it could be a much stronger medium-term picture for the UK economy than many people have been talking about.
Do you think that the economy would benefit from a clear mandate at the forthcoming election?
I think that something like a hung parliament and the uncertainty that creates would be extremely unhelpful. So I think, a clear mandate, whichever party, would be beneficial. And I think to a degree the important challenges at a macroeconomic level around dealing with the public finances and the high levels of public debt we have, those challenges are the same whichever party wins, and I think we have an expectation that whoever wins will have to grasp that nettle.
Yes. But overall, you're looking to the next 2 years with perhaps more confidence than the past?
Yeah, I mean, I think that the UK economy has actually come through the winter more strongly than many people expected. We're seeing, for instance, estimates of economic growth being revised up now. There's some challenges along the way, but I think that it looks like we're now moving on to a road to recovery, and one where conditions are coming into place where there could be a rebalancing of the UK towards exports, back towards manufacturing to a degree, which would provide a more sustainable basis for medium-term growth.
Yes, well, let's hope that is the case. Adrian Cooper, thank you very much for your time today.
You're welcome.